This is Alan Bush with the Daily Financial Forecast for Tuesday, February 9th. In the stock index futures, we are seeing prices lower in the overnight trade, much of this linked to worries about the European banking industry. Also, we did have a couple of economic reports coming in on the weak side this morning, so that added to some of the pressure. However, we are seeing a recovery in stock indices. I think this is largely due to ideas that whatever economic weakness we may be seeing, either here in the U.S. or overseas, will be met with a Fed that is slow to raise interest rates, and central banks around the world that are accommodative and are likely to become even more accommodative, such as the Bank of Japan, the People's Bank of China, and the European Central Bank. We do feel that once the energy markets stabilize, that stock index futures will find a bottom from the current weakness that we have seen over the last couple of months. And ultimately, as it has been the case every single time since the lows were made in March of 2009, interest rates, as low as they are, have ultimately come to the rescue of stock index futures and resulted in a new round of additional buying. Now, moving over to the currencies, the dollar index, a little bit lower this morning. This primarily due to ideas that the Fed will not be raising interest rates this year. Also, we are seeing the yen trading higher as flight to quality buying comes into the Japanese yen in light of the banking problems that we are hearing about, or at least that are rumored in the Eurozone. And the pound under some pressure again now for a third day. This due to ideas that the Bank of England will not be raising interest rates anytime soon. Even financial markets now are predicting that the Bank of England will not raise until 2018. And I'm going on record saying that they will not be able to raise rates even at that late date. Now, moving over to the interest rate futures markets, the dominant influence continues to be a flight to quality move. As we mentioned, banking issues, at least rumored banking issues in the Eurozone, bringing flight to quality buying into treasuries. Also, we do feel that core inflation rates are starting to increase. That would be a negative aspect. However, the flight to quality influence is dominating, at least for right now. Also, as far as rate increase possibilities from the Fed, there is now only a 2% chance that the Fed will raise at the upcoming March meeting. It was only early in January, in fact, January 6th, that the probability of a rate increase was as high as 55%. Also, the probability of a rate increase at the December meeting now moving down to 29%. And at the February 7, 2017 meeting, probability is just 31%. So clearly the Fed is not likely to raise interest rates this year, as had been predicted, in fact, by the Fed in December, that they would raise 4 times. And economists late last year thought that the Fed could raise as many as 3 times. So look for the Fed to be on hold all of this year. And once the flight to quality buying dissipates, I think we can see the negative influence of higher core inflation levels starting to take hold. So once again, remember, these are my opinions alone and are not the opinions of ADMIS. And good trading, everyone.